Hi there, welcome to Kneppy Invests. Time for an update to Megaport. In particular, we'll be looking at the September quarter Appendix 4C for the financial year 22. This is a company that is well liked among retail investors and among many fund managers. A company that was started or founded by Bevan Slattery. And we have seen the share price and the value of this company continue to climb over the past 5 years, ever since they IPO'd. But in saying all that, this company is not profitable, is not generating any cash in their business. But I think that will eventually come. They are spending a fair bit of money right now, but when you look at the growth in cash receipts and revenue, there is eventually going to become a time when this company will be generating a fair bit of cash. They're just laying down the sort of the foundations of this business right now. And I think eventually what they're doing right now, spending a lot of money, will come or have benefits for shareholders in the future, say the next 5 years. For full disclosure purposes, I am not actually a shareholder of this company. However, I have been following their fortunes over the past 5 years, and there have been times in the past 2 years where the market has given us an opportunity to take a position in this company, and both times I decided not to take a position for some reason or not. So let's get stuck into it and talk about exactly what Megaport does and why the market seems to love this company. Megaport is a provider of network-as-a-service solutions. The company's global SDN helps businesses rapidly connect their network to services. So on this slide here, the revolutionizing global connectivity is their vision, and their mission is to be the global leader or global leading network-as-a-service provider and enable customers with an agile networking methodology through the Megaport Connected Edge strategy. They do use a lot of words that I'm a little bit uncertain about what they exactly are. And if you do have a look at their financials, Megaport mentioned ports, VXC, MCRs, MVEs, which is Megaport Virtual Edge. So I don't know or don't completely understand all of those terms, but in saying it, they are all growing at significant rates. Megaport was founded in 2013 by Bevan Slattery, and he is still on the board as a non-executive chairman. And the company was listed on the ASX towards the end of 2015 in December of that year. And I have been following this company ever since then, but I have never taken a position in this company. The current CEO is Vincent English. He's been in that role since 2017. He has a 1% stake in the company, while Bevan Slattery has a 7% holding. And one of the largest shareholders is Firetrail Investments. I don't know a lot about that investment fund, but I might have to learn a little bit more because they are one of the biggest shareholders in this company. And the current market cap of Megaport is $3.2 billion. That's at a share price of $20.60. And for a company that's not making any profit, is not operational cash flow positive, that might seem a little bit high. But just keep in mind that a company like Novonix has very little revenue, and they have a market cap something like $5 or $6 billion. So it's not all about revenue. It's not all about operational cash flow. It's about the future potential in regards to those financial metrics. And Megaport has significantly growing cash receipts or revenue right now, and that is important for a lot of investors. And the ticker code for Megaport is MP1. Now let's have a look at the financial year 2021 numbers for Megaport and just compare it to how this company was performing in 2020. Revenue has grown quite considerably from 58 million to 78.3 million. Gross margins has also improved to 54%. I would prefer that to be a little bit higher, but I think for Megaport this is a pretty good number. Now, they're not operational cash flow positive, but it definitely has improved from the previous year, only negative by $8.6 million for the last financial year. In financial year 2020, they were operational cash flow negative by $21.7 million. So definitely have improved in regards to operational cash flow. However, in saying that, Megaport is highly unprofitable. In fact, in financial year 2021, they are unprofitable or loss-making by $55 million. Megaport have done quite a bit of capital raisings over the past few years, and the main reason behind that, of course, is they are not operational cash flow positive. They are bleeding cash, and they do need to do capital raisings to maintain capital within the business. They also do acquisitions, and for those two reasons, they do quite a few capital raisings. They have at the moment, or at the end of the financial year, $133 million of cash. That has been dropping. And we'll have a look at the September quarter to see how far that has dropped. And price to sales ratio at the end of the financial year was 41. That is quite high. And that means the market is expecting significant growth for this company over the next 5 years. And eventually, the market will be expecting this company to be producing prodigious amounts of cash flow. And the whole point of a business and the whole way we value companies is to value or calculate the present value of all future cash flows. So if a company never becomes operational cash flow, that company's value is technically zero right now. So eventually, the market is expecting this company to significantly grow their revenue. They will show some scale, and then we'll see this cash coming in significant amounts. Very similar to what we have seen in Xero, XRO, over the past 8 years. They were also highly operational cash flow negative, but they were increasing their revenue at a significant amount, and now they've turned things around. Now I believe they are operational cash flow positive, and they are also profitable. They also calculate or give us monthly recurring revenue, and if you analyze the monthly recurring revenue, you get 89.8 million, and that has increased from 67.8 million at the end of the financial year 2020. It's always good to know where a company is deriving most of the revenue from, and for Megaport, at this point in time, it is North America, and they derive $38.7 million of their revenue, which is almost half of their global revenue. It's also increasing at the highest rate, up 47% on financial year 20. But if you look at the Asia Pacific and Europe, we also see revenue growing there as well. So this company is a global company, and they are being successful around the world. So that's another thing to like about this company, is their global reach. Before we have a look at the most recent Appendix 4C, I just want to go back 1 year ago to see how this company has performed over the past year. So what I'll be doing in this slide is looking at the September 2020 quarter, which is the first quarter of their financial year 2021, and the most recent quarter was the first quarter for financial year 2022. And I'll be looking at cash receipts, where the company is operational cash flow negative, and where a lot of their costs are going to. And we'll also have a very brief look at financing and what's the other one, investing activities, because they are spending a lot of money or receiving a lot of money in those activities. Now, receipts for customers in this quarter, 17.2 million. And because Megaport is spending a lot of money, $10.7 million on product manufacturing and operating costs, and $11 million on staff costs, that means this company was highly operational cash flow negative in this one quarter by $8.6 million. That's a lot of operational cash flow for one quarter. So that equates to about negative $35 million for a whole year. They began the quarter with $167 million of cash and finished it with $153 million. And the reason they're bleeding a lot of cash, or more cash than they were operational cash flow negative, is because they spent $4.2 million on capital expenditure and $2.2 million on intellectual property. So even when Megaport becomes operational cash flow positive, they'll still bleed a lot of cash because they do spend a lot of money on capital expenditure and intellectual property. But they did receive $3.6 million through the exercise of options. So let's have a look at how they performed in the most recent quarter to see how things have improved for Megaport. Well, business is improving, is getting better for Megaport. Receipts were up $9.1 million year on year, up to $26.4 million. Now, in saying that, a lot of that costs actually have gone up by a fair bit, including staff costs up $3.8 million and administration costs up $3.9 million. However, another thing here is product manufacturing and operating costs actually fell year on year by $600,000. So all up, the receipts from cash increase was actually greater than the increase in costs, which meant Megaport was not as operational cash flow negative in this quarter. They are only operational cash flow negative by $6.9 million. And again, just like last year, they are spending a lot of money in capital expenditure, up to $11 million in one quarter. That's a fair bit. Intellectual property up to $3.1 million. They also spent $10.4 million on an acquisition, and they only received $1.7 million in the exercise of options. So overall, the cash in this business actually fell by $22 million to $114.2 million. Now let's have a look at the receipts history for Megaport. And this is a great little graph right here because it does show you how successful this company has been over the past 5, almost 6 years. Because in the first quarter, they were listed on the ASX, they only received $540,000 in receipts. And that has grown to $26.4 million. That is a compound quarterly growth rate of 18.4%. If you told me a company was growing their receipts or their revenue by 18.4% per year, I would be impressed. But this is per quarter. In fact, it looked like at one point up until the December quarter of last year that the receipts were growing exponentially. But that growth, exponential growth in receipts might have come to a completion because the last 3 quarters we have seen the receipts actually backtrack a little bit. But we don't know. Maybe the next quarter, the last quarter of this calendar year, will go up to, say, $35 million or even $40 million, which would mean the exponential growth in receipts is back on again. And whenever I see receipts growing exponentially, that is exciting, and maybe one of the reasons why the market has been very excited about this company over the past 5 years. And you can see the excitement in the market in regards to Megaport just by looking at the chart, which goes back to when they listed on the ASX. This is the weekly chart. Now, over the first about 2.5 years, the share price just went sideways. When they listed, the share price was around $2 or just above $2, and you could have still bought this company in October, November of 2017, around that $2 range. And that's when we saw the breakout in the share price towards the end of 2017. And we have seen the share price of this company continually increase from then. Only twice have we seen significant dips. That was during the COVID-19 financial panic, and then again in March and April of this year. Both times the share price moved towards the 50-week moving average and then bounced off it. So it seems like, just based off this chart, if the share price ever gets to that 50-week moving average, that would be a good time to buy in. And the last time we saw it hit that 50-week moving average back in March of this year, we have seen the share price take off. And in fact, it's almost doubled in share price since then. So right now, share price is $20.41 from when, or just before I did this video, which means the share price of Megaport is nearly at an all-time high. There are shareholders, there are investors out there who get nervous when they see a share price of a company at all-time highs. I'm not sure why. That's actually a good thing. That means things are going right for a company. That means there's positive sentiment behind the company. So don't be afraid to buy a company when a share price is at an all-time high. Because if you go through this chart of Megaport, particularly over the past 3.5 years, the share price of Megaport has continually been at all-time highs. Also, don't be afraid to buy the company if there is a bit of a dip. So if we see a share price move towards $14 to $15 over the next, I'd say, 2 months, that could be a good time to take a position in this company, particularly if you're very confident about the next 5 years for Megaport. That's all I have for this September quarter Appendix 4C video for Megaport, their first quarter results for their financial year 22. Things are still looking pretty good for this company. Even though I am not a shareholder, I do think there are some really good things in store for this company and their shareholders. So I don't know why I have never taken a position in this company. I've always liked Megaport. Maybe I should just take a position and just hold that position for the long term. If you do have any questions about this company or any other company on the ASX, please leave your thoughts, your questions, anything else in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.